Welcome everyone to today's Lion Energy Investor Briefing webinar. It's a pleasure to have you with us. My name is Nicola Gazzatti from Investor Relations Consultancy Corporate Storytime. Lion Energy is an ASX-listed oil and gas and exploration and production company with a conventional production sharing contract on Seram Island in Indonesia. Lion is also a mover in the hydrogen space and has pulled back on any further capital investment until Lion and Partners secures ARENA funding. I'm delighted to be joined by Tom Soulsby, Executive Chairman, and Exploration Manager Kim Morrison of Lion Energy. Tom and Kim will be walking us through the recently announced East Seram PSC farm out to project partner OPIC, which will see the highly prospective Bula Karang oil exploration prospect drilled during calendar year 2026. So without any further ado, I'm pleased to hand over to Tom and Kim.
Thanks very much, Nicola. I just wanted to start off by saying that I appreciate people's time to focus a bit of attention on Lion today. We're pretty excited about this news in relation to the funding of this Bula Karang well. And in terms of sequencing, today we're going to be talking about the Bula Karang opportunity and funding. And we are going to be doing a separate webinar for our update on our hydrogen business. But what Nicola said there in relation to, as we reported in our quarterly, where we're pulling back on capital spending in the hydrogen business at the moment as we're working on an ARENA application, and we'll update the market in due course in relation to that. But we're very excited. We've actually kept a toe in the oil and gas water for the last 2-3 years. We haven't at all neglected oil and gas, and we're very excited to be talking oil and gas today. So without any further ado, why don't I get going? So just in terms of a little bit of background first online, where we've got the capital structure, as you can see here. Our market cap is relatively low at the moment, which is a great opportunity for shareholders to if they fully appreciate this opportunity we've got to make some money over the coming months and years out of Lion off that low base, where we've been very cautious with the way that we've managed our hydrogen and our oil and gas businesses. The last few years, you would have noticed that we divested half of the hydrogen project a year ago, and that we are in the process of divesting about 15% of our oil and gas exposure to East Seram, basically to fund capital. So in the case of our hydrogen business, we raised 3.7 million, which went straight onto our balance sheet, and we've also raised about $6 million in funding from those partners. In this particular instance, we'll talk about soon, we've raised about $5 million US in funding, about 88% of the well. We've got about 2.4 million in cash as of the end of September. This gives you a bit of an idea of the breakdown of our shareholder structure. We're publicly traded to about 65% of the capital base. So just in terms of today's discussion, the opportunity that we've got right now is to basically drill a 12 million barrel oil prospect in the Bula Bay area, which is just slightly offshore the town of Bula in East Indonesia. We've got that now fully funded, and Lion will retain a 45% post-drilling exposure into what potentially could be a 12 million barrel discovery. It's our first exploration well in the East Seram block. People that have been following us for a while would realise that we took over the PSC in the late 2010s. We shot seismic through COVID in 2023. We've been working up shortlisting our inventory of opportunities, and this is our first well that we're drilling. And this is a great opportunity to unlock the basin's potential. I mentioned already that we're going to retain 45% working interest in the project. And I'm pleased to say that in my 20 plus years of doing oil and gas deals, I believe this is the best exploration deal that I've negotiated and seen. So we've got OPIC actually funding 88% of the well costs. They're going to move from 40% to 55%. Lion's going to move from 60 to 45, and we're only up for 12% of the funding costs. It's highly prospective with world-class fiscal terms. We'll talk about that in a second, and we'll also illustrate to everybody how much infrastructure actually is already in place, such that this is a fast track to development opportunity. The deal itself is highlighted as follows. So OPIC's funding about 4.9 million of the 5.6 million budget. If there are any costs beyond 5.6 million, I just wanted to highlight that that'll get funded on a 45-55 basis. Lion will be, and Bula, which is our subsidiary, will be operating this well. We're highly motivated to keep the costs within our budget. We'll be transferring 15% of our interest to OPIC as part of the deal. The only condition is Government of Indonesia approval. And the operatorship remains with Lion, but OPIC have an entitlement to request operatorship if they go above 50%. We've got a strong technical team, both supervising and executing this well. We've already assembled an 8 or 9 man team under Steve Hall. Steve has got 20 years of drilling experience. He's our drilling manager on it. We're very fortunate to have Kim, extensive experience both as a geologist and well site geologist with a number of multinational companies. And Kim really is the geological expert for Seram Island after spending 8 or 9 years looking at that island. I wanted to just quickly remind everybody about our contractual arrangement. Firstly, the PSC has got a 30-year term from 2018. It's divided into an exploration period and then an exploitation period. So we're still in the exploration period. And upon drilling this well and then putting a plan of development in place, we'll still have another 20 years to exploit all the opportunities that can evolve from this, which we'll talk about in a second. The basin is extensive with 40 million barrels produced, which is largely right in the vicinity of where we're drilling, literally within 5 to 10 kilometres. The resource potential is significant. And currently the partner interests are 60-40. And as I've said, moving to 45-65 on the back of this well. The basin is relatively unexplored, the Seram Basin, and particularly for investors in the Aussie market, there's a lot of familiarity here with the Papua Fold Belt, the Bonaparte Basin. And for those that have been long-term Indonesian followers, obviously BP PetroChina's exposure in the Bintuni Basin and Sulawesi Basins in Indonesia are very well known. And you can see here, we've given a bit of an idea. There's over 600 wells that have been drilled, exploration wells in this area, and there's only about 30 wells that have been drilled in the Seram Basin. Kim will talk about this a little bit later, but we think this is a major unexplored province, and certainly the Indonesian government see this as one of the best exploration opportunities, albeit close to infrastructure in Indonesia. When we talk about Indonesia, we normally in the same breath talk about poor fiscal terms. Indonesia has generally been seen as a mature oil and gas province, and there's been a lot of low-hanging fruit that's been exploited at poorer contractor share fiscal terms than the Southeast Asian average. What we've got with our East Seram PSC is one of the best fiscal term environments in Southeast Asia, if not in Asia itself. We've got a take for the contractor, which we believe will be under our gross split PSC around about 50%. And that's actually better than the world average. So as far as I'm concerned, anything we find there, we're doing on the basis of world-class fiscal terms. And that is exceptional. The other thing that we look at in oil and gas investing, of course, is combining fiscal attractiveness, which I've just highlighted to you, with prospectivity. And what you normally get in the world is if you have high fiscal attractiveness, you generally have poor prospectivity. An example of that could be Ireland, for example. Sometimes you get really poor fiscal terms, but it's highly prospective. What we've got here in Indonesia with Balam's East Seram PSC is quite a unique address. I call them rare coordinates. We've got the combination of high prospectivity and attractive fiscal terms. So we're very excited as we move forward on this. And just before we move into the details of the Bula Karang well, I just wanted to highlight to you that we announced in the fourth quarter last year, the sale of our strategic interest in the Seram Non-Bula PSC. And the grey area here is the block which we're exiting, and we're in the process of obtaining approval from the Indonesian government on this transaction. We expect that to come in the next 2 or 3 months. And what we've done there is sold the business for about 1.2 million US dollars. And what this does is actually enables us to be fully funded for our opportunity here. What we had with our interest in this block is what we called 2.5% equity interest for 100% information. As we've sort of now moved into 2026, we believe we've got all the information skimmed from this block. We've got a very attractive exit, and now we're moving into redeploying that capital into the exploration well in the Bula Karang area, which is over here. The other thing I'd highlight to you there is that we still have exposure to the Loffen discovery through what we believe is the extension of the Loffen field into the East Seram PSC, into our Area B. So our areas are Area A, what we've retained, Area B, Area C is where we're drilling, and Area D is the other area which we've retained. I'll pass the microphone now to Kim, who's our exploration manager, to take us through more detail on the Bula Karang opportunity.
Right, yeah, no, thank you, and thank you for joining today. So look, we're actually very proud of what we've achieved as a relatively small company, and we consider ourselves to be one of the more active exploration companies in Indonesia over the last 6 years. So we've signed the PSC in 2018, July 2018, and we've had 2 rounds of seismic data to help us understand and explore the block. The first was in 2020, which was a 660-kilometre 2D offshore survey, and that met the primary commitment on the block. So that was partly in the offshore Kobe area to the northwest, and then partly in the offshore Bula area where we're going to be focusing today. And then in 2022 we shot, and that was actually focused, the offshore seismic was focused on what we call the shallow play or the Pleistocene play. So a shallow objective, cheaper drilling, more oil prone. Then in 2022, we shot an onshore survey. And again, this was quite a complex survey. We achieved it essentially on budget with no incidents, no HSE incidents, and acquired good data. And from that, we actually proved up 3 really attractive fold belt prospects. So the Kobe prospect, that's about a 360 million barrel oil equivalent P50 resource, upside of about 1 billion barrels. That's about 100 square kilometre closure. That's something that we retain excited about, and we'll talk about the implications of Bula Karang on that in a second. We also shot seismic over the Waru prospect and the Tanah Baru prospect in the Area D, and they're both almost 200 million barrel plus prospects. So we've got a very exciting portfolio. What we like about drilling Bula Karang is if we're able to have a plan of development on that, we retain all this area that you see on this map for the next 20 years. So essentially, it gives us the option then to come in and drill some of these real world-class prospects at the same time as getting cash flow from the Bula Karang field. So in the table there, you see the listing of the main prospects. Bula Karang, as Tom mentioned, is a 12 million barrel P50 resource. It's got an upside case, or a P10 case, as we say, of up to 30 million barrels. So, potential to be a very significant find. And we're actively now, we've got the funding in place. We've got a drill team in place. So we're working through the detailed well planning. We're in the middle of doing tendering, and we're planning on spudding the well in June or early July this year, and that's well in hand. We'll talk about that more later. So focusing on that area C, what came out of the 2020 seismic was a really attractive suite of prospects in that area. In this map, you can see the Bula field in the green with its satellites. That's, as Tom mentioned, about 20 million barrels has been produced from that area. And then in the offshore area, we've got the blue prospects are the reef prospects or the carbonate prospects. These are reefal buildups that are attractive plays right through Southeast Asia. And in the yellow are the sandstone prospects. So what we have, and you can see the location, and what we're planning is a deviated well spudding onshore for the Bula Karang, deviating offshore to test the prospect, and that allows rapid commercialization and also drilling the prospect for around $6 million compared to probably $15 million plus if we were going to drill an offshore well. It also allows rapid commercialization of the resource. So again, one of the reasons we're focusing on this area is we're close to the infrastructure. It allows rapid commercialization in the event of success, and also in Indonesia, there's a potential to almost immediately bring on a discovery through what's called a put-on production license. So our aim is we have success, we will then work towards getting that put-on production license and start by trucking oil initially, and depending on the size, potentially building a pipeline to the existing facilities that allows us to accelerate that commercialization. And then just this is, I think, going back and looking at that prospect. So if we do have success with Bula Karang, there is significant follow-up in the immediate area and up to 50 million barrel plus potential in this area. And we know there's oil there from Bula, obviously. We also know there's extensive oil and gas seeps from various studies that have been done in the area, including on and offshore. So we know there's a proven oil area. We've got some good prospects from our new seismic. And with success of Bula Karang, we've got significant follow-up. So it will become, I think, real focus, and I think you'll start to see the focus. Lion will get in the news because we've got the rights to what we consider to be a highly prospective area. So this is a schematic of the well plan that we're proposing. As I mentioned, we're spudding onshore. We're actually spudding in an area of an existing field. The Bula Aya field, as it's called, has produced over 500,000 barrels. We're actually not targeting the reservoir that produced there, but drilling offshore. We've got some secondary objectives that we'll be intersecting on the way to the main objective, which is this well-defined reefal buildup. So it's a carbonate reef. We expect to have good porosity and permeability in that reefal buildup. Again, similar to what's producing, for example, in the Salawati Basin. It's primarily production from similar type reefal buildups, and we will, because we're drilling from onshore, as I've mentioned, it allows us to have almost near-term production in the event of success.
Thanks, Kim. So people would be interested to know, obviously, we've made this announcement in terms of our funding on January the 2nd. We've been cognizant of the fact that and confident that we get the funding. So we haven't waited until January to commence work. We've been going since in a more intensive time since October. You can see here that we're working through building up for tendering, our tendering packages, and looking at ordering long lead items. So procurement's commenced, HS&E planning's commenced, and our detailed drilling plans have already commenced. In terms of milestones moving forward, we're looking to secure environmental permitting. We're looking to secure the rig, and most importantly, we're looking at mobilising and drilling in the second quarter of 2026. So this is a tight time frame, but we're certainly pushing for a robust and drilling program and timely for completion no later than July.
we've actually spent a lot of time analysing this area. We've got a lot of experience in this, and we've really designed our program to address the risks that we have. That we are in a risky business. I think anyone investing in oil and gas companies will be aware of that. And what we've sought to do is by looking at where the risks are and what we can do to mitigate it. For example, the reservoir quality. There are uncertainties on limestone reservoir quality, and by drilling actually a deviated well, that enhances our exposure and our basically the footage that we're going to have exposed to that reservoir, which actually will maximize the flow potential. We've also spent quite a bit of time looking at the best way to test the well. We are looking at an open hole test, which will allow us to again maximize the production. So that's our testing plan is well in hand, and we spend a lot of time looking at that to maximize the flow rate. And then looking at the geological risk with the structure. Again, we've sort of done a lot of work on the seismic interpretation, integrating with the onshore data, and we have not only the primary objective but the secondary objective, and our work has been really focused on making sure that we're drilling the prospect in the best possible location. And then there is a seal risk with the prospect, and that I think we're confident that we've addressed that as best we can. We do have the secondary objective, which are the sandstones that we believe will be overlying. And as we know from the Bula field, which is a 20 million barrel plus field, the sand potential in the area can be significant as well. So we've got not just the one objective, we've got objectives on the way down that we'll be evaluating, and we're looking at addressing the risk through our ongoing exploration program that's been going on for the last 6 years.
Thanks, Kim. So just in terms of summary, as we draw this pack to a conclusion, the investment of the well cost for the JV is about 6 million. OPIC funding is there, 88% of the well. Lion's now fully funded for its remaining share. We're not going to be drawing on shareholders for the purposes of this for this well. And of course, we spoke about the potential both in this first potential discovery and then the follow-on opportunities. We've got a 45% fairly significant working interest exposure to that. Just in terms of near-term share price catalysts, we've obviously been going through the planning. We're looking at drilling and sort of appraisal and development, particularly if we can put on production through the back half of 2026 and commercialization into 2027. Some cash flow, but more expanded cash flow as we execute our development plan through 2027. So we've got an exciting set in our oil and gas business of near share price catalysts, especially if we have a successful well. So in terms of timing and investing in Lion now, obviously we've mitigated our downside by way of our funding plan. We've only got 12% exposure in terms of our funding, and we've funded that by way of the sale of our Seram Bula interest. We've got 45% exposure to this Bula Karang well within the next 6 months. And upon success, that can be pretty rapid value creation if we pull that off. Obviously, I've mentioned the retained exposure already. The returns are quite resilient. It's attractive economics with strong development potential in a favourable fiscal regime. And of course, it could significantly enhance Lion's valuation off a fairly low market cap base now. So now is a very good time to be investing in Lion. So, Nicola, that sort of brings our presentation to conclusion, and I'm happy to hand it back to you.
Thank you so much, Tom, for your presentation, and thanks to Kim also. We'll now move on to our Q&A session. Our first question is for you, Tom. Could we have a brief update on the status of the Port of Brisbane Green Hydrogen Project and the company's broader hydrogen business?
So just in terms of the hydrogen business, the business, we're still seriously looking into hydrogen. There's been about $7.5 million of joint venture funds invested into hydrogen, of which we sold half of it. We got half of that back late last year. And we're in the process now of, after sort of a JDA discussions, of seeking ARENA funding to get us to a PO, a plan of development approval position. So the business is still progressing. It's progressing slower. And so we'll provide the market with an update on our positioning in hydrogen in about a week's time.
Thank you, Tom. Our next question: what do you consider to be the look-through value for Lion associated with the recent East Seram PSC farm-out transaction?
So just to reiterate, the total funding's 5.6 million, and the lion's share of that's about 0.7. I've mentioned that, around about $1 million Aussie. The retaining interest is 45. So the implied promote for OPIC to go from 40% to 55 is about $2.7 million USD for 15%. And so the implied value of 100% is actually 17.92 million. 7.92 million. So Lion retains 45% of that, or around about 8 million or 12.4 million Aussie. So you can see there that for a $1 million investment, we're getting about 12.4 million value just on the basis of the promote. That's 12 times the investment. So that's the first point. The EMV net to Lion is around about 29 million, and that's about 28 times. So the implied value is somewhere between the promote and the potential EMV.
Thank you, Tom. Our final question for today: within a reasonable range, what do you think is the likely value to Lion Energy from an oil discovery at Bula Karang?
On a prospective resource P50 basis, at a 10% discount rate, if we run a model which is on an unrisked basis, the value is about $125 million US dollars for 12 million barrel, for a 12 million barrel discovery. So Lion would be 45% of that. So 45% of 125 million USD is the answer. So it's in the 70 Aussie range.
Tom and Kim, before we close, do you have any final comments you'd like to share?
We're obviously got a really busy 6 months ahead of us. We're excited about that, Nicola, and we'll be managing our hydrogen exposure. We'll talk to the market about that in a week's time or so. But moreover, we're really busy with our activities to get this Bula Karang well away. We're very excited about it. So we're completely focused on value creation for shareholders in this first half.
You covered that, Tom. So thank you very much. And as I say, if there's any other questions, I'm sure Nicola can pass them on to us.
Thank you to you both for providing us with such a comprehensive update on Lion's activities. That does conclude our webinar for today. And on behalf of Lion Energy and Corporate Storytime, thank you all for joining us, and we look forward to welcoming you to our next investor update. Enjoy your day, everyone.